Hi, I'm Alan Goldstein, enrolled agent.
And I'm Peter Gonzalez, enrolled agent.
Remember that we serve clients worldwide, nationwide, regardless of where you live. If you have an IRS problem, we can take care of it for you. Call us at 786-592-2476. Now today we're going to talk to you about liens, an IRS lien. What is a lien and things like that. We're going to briefly touch on it because it can get complicated, and the solution to a lien is based on your specific fact pattern. So there is no general answer, but there are some general things. For instance, what is a lien withdrawal? That's one of the options, and the lien withdrawal is when the IRS withdraws the lien from public record, and that's not very common. That's only done, for instance, if the lien was premature. In other words, the IRS violated one of their own rules, or their facts were not correct, and they went ahead and filed the lien against you. Another one is if you have an installment agreement for a certain amount of time, then they might go ahead and release that. Obviously, if you pay your whole balance in full, assuming that your balance is correct. If it's to facilitate collection efforts, if it helps them collect, then they'll go ahead and do it. Or if it's in the best interest of both parties, meaning the IRS and yourself. Another option that we have is a lien discharge. And basically a lien discharge, what it means is that they discharge the lien for a specific event, such as a property. So let's say you're going to sell a property, but a lien is attached to that property. Well, they'll do a lien discharge specific to that property only, and then the lien will continue to stand, but you'll be able to sell your property and things like that. Then we also have subordination of lien, which basically means that the lien takes a different priority level in the scheme of state and federal laws, meaning whether your mortgage comes first, whether you any other type of loan, what order is it, creditors, vehicle liens, things of that nature. So in some cases, if it facilitates the process of collection, the IRS will subordinate the lien, change their position, usually with some sort of protection involved, meaning that they'll go ahead and do it if the lien is going to be paid off or things like that. And again, it depends on your fact pattern, so it's best to call professionals. And then we also have the issue, well, somebody contacted me that there's a lien against me, but I don't owe the IRS nothing, and it's an identity theft issue. What do I do? Well, you have to do something and work fast so that the lien doesn't destroy your credit file and cause you problems. And the first thing that you do is obviously prove that that person is not you. And you can do it yourself, but I advise that you get a professional like us to take care of that for you. And what you want to do is get a certificate of non-attachment signed by the IRS. And that basically means that the IRS concedes that you're not the named individual in the lien that's filed in public records. And this way, that certificate gets filed and you have a copy so that it doesn't become an issue. And then there's a whole big process. You have to start notifying agencies and things like that. It's very time consuming, and unless you have a lot of hours and a lot of days available, it's best that you let professionals handle that so it could be done correctly the first time and that there's no guessing involved. So as you know,
and I get this question asked a lot, and I hope that you can answer it. How long does it take for a lien to stop being collected?
That's an interesting question. You have what are called assessment dates, and basically what that means is that the IRS assesses the balance, and then you have the IRS has 10 years to collect on that balance. meaning that if 1996 debt was assessed in 1998, let's say, then you have 10 years from that point, or 2008, for the IRS to collect on that debt. But I must warn you, even though you have that assessment, if it's based on a substitute for return, and you haven't filed a real tax return, meaning the one that you completed, then they can come back and assess you again for that same period. So we want to be clear that substitute for returns are very delicate, and it affects your statute of limitations for collections on liens.
Now, if after those 10 years they wipe the lien back off your record, they cannot go after you again for the same.
Absolutely, it's beyond the statute of limitations, and then that debt, they will no longer go after you for that debt. Thank you.
Have a great day.